Hello, everyone, and welcome to Trader Talks webcast here at Schwab Coaching. I am Rachel Deshelle, Senior Manager of Trading Services, and your host today for Straddles and Strangles, filling in for Connie Hill. Now, we do have Brent Moores there in the chat, so please feel free to chat in your questions, comments today. And please, at the end, please like this video and subscribe to our Trader Talks channel here on YouTube to see more of our content here. So today we are going to look at covering a scan for possible candidates for long straddles and long strangles. So we're going to talk about those today, but before we get started, let's just hop into some important disclosures here. So options carry a high level of risk and are not suitable for all investors. The information that we're going to cover here is for informational and educational purposes only. It should not be considered any type of recommendation or advice. And short options can be assigned at any time up to expiration, regardless of the in-the-money amount. And also, we are going to place some trades on the paper money side. Paper money differs a little bit from live trading here. Now, getting into our agenda, we are going to review the current market conditions. We're also going to review some of the old trades that Connie had placed in the last week or so when she last taught this class. We are going to also discuss some sample advanced option strategies. Like I said, today we'll focus on the long strangles, long straddles, and then we'll look at analyzing those trades for those paper money examples there. So let's hop into Think or Swim and just kind of start with where we're at in the markets real quick here. So with all of the major averages, the S&P 500, the NASDAQ Composite, and the Dow Jones Industrial Average, last week, especially on Friday, they all seemed to find support right around this 100-day simple moving average here. And you can kind of see that clear-cut neckline kind of being drawn out here in the S&P 500, right where that horizontal support was right around 6,500 there. And we can see I guess not yesterday because that was a Sunday, but on Friday, we still closed above that 100-day moving average with a bullish Harami candlestick. So I'm going to zoom in a little bit closer to that to show you. We have the first day being a big red candle, the second day with that body of the candle trading within the previous body of Thursday with that green kind of bullish candle there. And we obviously are seeing some follow through today. So we may see a little bit of resistance up ahead at the 50-period simple moving average right above 6,700 or so, but those are kind of going to be the levels to watch there. And I mentioned we hit that level on the other indices as well, so we can see similar pattern here in the NASDAQ, that neckline right around 22,000 or 22,200, kind of a range there. And then let's look at the Dow Jones Industrial Average here. Kind of same picture. I'm going to take off this drawing here. So same picture. We didn't even trade below the 100-period moving average at all, and we're pretty close to the 50-period moving average. So that will act as those areas of support and resistance. So now let's get into just some of the trades that we saw last week that you guys placed with Connie. I'm going to go into the account statement and just show some of the trades that she closed out here. So you had the KLAR trade that you guys put on that short straddle there. And it looks like we closed it out for these specific prices here, right on the 18th and 19th. And then same with NVIDIA too. It looks like we closed those out on the 20th, where we had we really had that short side being closed out at these prices. We had the long side being closed out at those prices. So that gives you an idea of just kind of how those trades went and where she closed those out to manage those trades. Now let's go into a little bit of the scan tab, and let's just kind of talk about just this really simple scan that we could do for any upcoming events, because We know that in this class, if you've watched it before, if we are looking for long straddles and long strangles, we are expecting some type of major move to happen within the particular stock. And a lot of times these major moves really occur around an earnings date or an FOMC announcement, things like that. So you can definitely look for those upcoming types of earnings releases or economic data by using these filters on the Market Watch calendar tab, and you can definitely look through that way. But one way that I like to look, and I know some traders will use this as well, is using the Scan Stock Hacker tool, where we can look for those upcoming possible events. So it gives us a way to kind of narrow down our search to specific things that we're looking for. So one of the things that we're going to be looking for, if we're expecting a big move within the next few days or so, we're going to look for a stock that may have an earnings announcement in the next 5 days. So let's just kind of start out on this scan here. So we're going to start by scanning in all listed stocks, and I'm going to change that category to all listed stocks here. And then from there, we already have this setup scan for tentative earnings in the next 5 days. So if you actually want to go to the 3-line menu on the right-hand side by the flame load scan query, you could go to your public scans and you could actually see a couple for upcoming earnings. So you have upcoming earnings and then you have tentative earnings in the next 5 days. And really all that does is it adds this study filter for the corporate actions, and we just have earnings selected. So if you kind of build it from scratch, that's where you can kind of go there. But this just shows we have earnings, we have an earnings reaction anytime in the next 5 days. So bars will be days there. Now, obviously, you can change the time frame, but we're wanting to look in this case for a short-term trade, a big possible move. So we're going to kind of work through our checklist of items here as we kind of build this scan. So also the other thing that we're looking for, if we want to place options trades on big possible moves, we want to look for stocks that have enough liquidity, because we know if the stock is more liquid, obviously the options should likely be more liquid as well. So that's definitely something we want to look for too. So if I go to add a filter and I go to study, this will give me a volume filter where I could look for an average level of volume. And we can just say the 50-day average of volume is greater than 1 million shares traded here. So that's going to narrow down our search quite a bit. I guess before we do that, we're also going to add another basic filter in just for price, because if we're looking for a big move in the stock, we typically probably want to look for a stock that's at least, I would say, $20 or so. So I'm going to look for a stock price. The last price is at least $20. So if I hit scan, and I'm going to change this to just 200 so it doesn't slow down my scan. So this gives me a good amount of a list of stocks to look for here with upcoming earnings in the next 5 days. So I'm going to click this 3-line menu, and I'm going to save this scan query, and I'm just going to name it as upcoming earnings. Hit save. Okay. So I have that scan saved, and a couple things that we want to take into account here, because I'm going to look at this on a watch list over on the left-hand side here. So I'm just going to expand that watch list now, because when we make that scan, it really transforms into that dynamic watch list where we're obviously going to have stocks that are automatically added, automatically removed if one of those filters isn't met. So let's kind of see this here. So one of the things we want to look for, especially kind of leading into earnings, we may have a implied volatility that is a little bit more at a heightened level. So one thing that I kind of put here on our watch list as a column or as a filter here would be IV percentile. So this can kind of give us an indication whether the implied volatility is relatively high or relatively low, compared to itself, compared to that implied volatility that it's shown over the last year, I should say. So if we just kind of add this study to the bottom here, we can kind of see typically leading into major events like earnings, we typically see an elevated implied volatility, but here with Alibaba, we're really not seeing elevated implied volatility levels leading into this earnings announcement. So that may still give us an opportunity to take advantage of that possible move from earnings with not experiencing so much volatility crush, we would kind of call it. Now, on the flip side, if we're looking to sell a straddle or sell a strangle, we may be looking for a stock probably trying to stay in a particular range, and we may be looking for those elevated levels of implied volatility. But we're going to look at just the long side of the equation today. So we're going to look at a couple of different examples that have that lower IV percentile or that lower volatility. And then I see a couple questions in the chat. Love the dynamic list. Yes, you can create all different types of scans. When you save that scan query, that's what's going to transform it into that dynamic list. You can even get alerted when those scan results change. So if you ever do want to get alerted when those change, you could always go up to the Market Watch tab, go to quotes, and let me just load this watch list here just to kind of show you. So if we go to our upcoming earnings, let's see here, upcoming earnings, and we go over to the 3-line menu in the upper right-hand corner, we can alert when scan results change. So if we want to keep this scan running to look for new candidates or what's being added, what's being removed, you can definitely get alerted on that as well when new symbols are added to that watch list. So just wanted to show you that little trick there. And then how would you make the scan change with time? So with each passing day, that scan, since we have this based off of a time period of just 5 bars or 5 days, you can always change this aggregation. So instead of saying 5 days, you could change that to 5 hours or 5 4-hour periods, or you could change this to 10 days, whatever you'd like to change that time frame. With each passing aggregation of that time frame, you're going to have those new symbols added and removed. Let's see. Can you show scan details? Yes. So this is the scan details here. If you would like, I can share this with you. I'm going to share the scan query here. And if you'd like, you can always put another filter in there. Since we're talking about implied volatility, you can always add another filter for study and add an IV percentile for like the lower ranges. Percentiles are obviously going to go from 1 to 100. So if you're looking for more of a long type of straddle or strangle strategy where you're looking at a larger forecasted move, lower levels of implied volatility, you may put that IV percentile at a lower level there. And then you can obviously use, if you're kind of expecting a smaller move or a range-bound move with the higher levels of implied volatility for a short straddle or short strangle, you can obviously add a filter in for those higher levels of implied volatility too. And Brent did an awesome favor here and just put in a disclaimer that these scripts are for educational purposes only. So they're not a recommendation for a strategy or anything like that. So just wanted to share that with you, that you can just use for educational purposes only there. So we talked a little bit about one of the components that is obviously, or a couple components that's actually going to affect this strategy. One being we are looking for an upcoming earnings date and we are looking for a large move. The other one being, obviously, we're going to have some impacts with our long options in implied volatility, because if we buy before that earnings date, before that big announcement, and we sell our options after that announcement, sometimes we will see obviously that volatility crush, but that's why we're kind of keeping an eye on this IV percentile implied volatility there. So just something to watch there leading into earnings. Now you're probably wondering, okay, well, if we're looking for a big move in a stock, how can we historically see that that stock has made major moves in the past? Well, we have a short watch list to look through. I mean, this is probably 25 symbols or so. We can just quickly shift through the chart or quickly shift through the analyze earnings sub tab as well to look for a couple different things. So when we're looking for those major moves to build that long straddle, to build that long strangle, we're going to look at what that stock price did with the last earnings announcement. So here we can look for one of two things or one or the other. We can look for gaps on the chart and we can look for big candlesticks, really showing those big historical reactions to what that stock price has done. Now, obviously, history doesn't always repeat. Sometimes it rhymes, so it's no guarantee that the stock is going to have a large reaction to earnings the next time around. But let's just look at that as one of our examples to kind of look for here. So obviously with this earnings announcement earlier in the year, we did see that big gap in earnings there. Another one here with May's earnings, we saw another gap there in the chart. Same here with a gap up, finding support at that 50-day, at that 100-day moving average, gapping and moving higher. So we'll just kind of use that as an example to say, okay, BABA typically has a little bit of a gap reaction going into earnings here. And even just today, we had that bounce of support there that we saw really close to that 100 period moving average and right on that horizontal support there from March highs. Really bouncing back up here. So we could expect this stock could possibly move down back towards that support, right, either below horizontal support, looking more closely to that 100 period moving average, or it could bounce back up to and reclaim that 50-day moving average as well. So a couple different directions it could go, possibly leading into earnings there. So with this, we may look at a long strangle to just kind of take advantage of that larger directional move there. So I'm going to move to the trade tab here, and I'm going to look at BABA with a couple different expiration dates here. Now, since we are buying an option, one of the things that we want to kind of keep in mind is our time to expiration and how long we're actually going to be in this trade. So one of the things to note with this is obviously we don't want to see a ton of time decay. We don't want a very close till expiration option, because obviously that time decay is going to be a lot quicker and quicker, and it's only going to get larger and larger the closer we get to expiration. And you can kind of see that if you just open up one of these and look at the theta. So looking at the Greeks on your option chain here, you can see that that theta decay or that theoretical kind of decay in the option with each passing day is going to be roughly around 17 cents there. Just kind of looking at this call example. But if we look a little bit further out in expiration, looking at this one with 53 days left till expiration, you're obviously going to see a lot less theta decay here on both sides, the call and the put side there. And then the other thing that we want to kind of keep in mind, we're not going to hold this option for very long anyways. We just really want to take advantage of that directional movement in the stock. So we are just looking to be in this trade possibly not even a week or so. Really a short-term time frame for being in this trade. So we're not going to let ourselves see a ton of time decay anyways. We are kind of expecting that kind of delta or that directional movement based off of that movement of the underlying stock in that option is kind of going to be our biggest pull here. So let's just kind of use an example by looking at some of the open interest and volume here as we kind of build out a strangle here. And a strangle is going to basically have us buying a put option at one strike price and buying a call option at a different strike price. Now, if we were looking at a straddle, we would be looking at an at the money option, buying a call, buying a put of that same strike there. But we're going to look a little further out of the money here just to kind of strangle the market in expecting that move. And our options are going to be cheaper doing that as well, because the at the money options are a little bit higher in price, obviously, there too. So let's just take a look at the 170 strike. We're going to hold down the control key on our option here. And at the same time, let's look at that 150 strike on the put side. So I'm just holding that control key down. You can kind of see by those numbers that pop up at the top. And I'm just going to click on that asking price of that put option. So that gives us a directional move of $10 in either direction. And you can actually kind of see here, I mean, obviously this is just looking towards expiration here. Showing in the next 53 days, we're kind of expecting a larger move there. But again, we're only going to be holding this for a few days. So let's just kind of look at some of the components of the trade here. So we are going to be paying $12.93 for this option. So $1,293, and that is the most that we are going to lose in this option. So I'm going to go over and right click on this option trade and actually go to analyze trade to walk through a couple different scenarios here. So this is kind of going to be what our risk graph is going to look like. And I'm going to do a couple things here. For those of you that are new to using the Analyze Risk Profile tab, just gonna kind of cover a couple of the basics here. We have the price of our stock on the x-axis down here. So if the price of the stock moves up, if it moves down, this is kind of going to be where our profit and loss really resides. And you can see these two colorful dates that match these two colorful lines on the background of the chart. And the purple line is just going to represent what our profit and loss risk, I guess our profit and loss graph and our break evens look like if we saw an expected move in the stock today versus on expiration there. And then if we look at the y-axis here, this is going to show us our max loss here, our break-even points here with these little red slices that coincide with that level, and then our max gain to the upside here. So a couple of things we could do. Now, if we're looking at just a stock making a major move in the next day or so, let's look at a couple of things. So we're going to set these slices to break even. Let's just set that for today. So obviously, if we just set those slices for today, we would just need a move outside of these two prices. And I'll kind of open up this price slices graph here. So to make any money here, let's reset those again. Let's see if they can be a little bit more precise. Okay. So we would to see any type of profit today on this trade, we would just need a move above 160.96 here. And you can see that puts us in the profit. So we would just need a little bit of a move for us to see that profit to the upside. And then to the downside, if the price of the stock does move down, we would need to see a move below 151.98 for us to make any profit for the downside today. Now, a couple different things you could do. I'm going to change these lines, this one at expiration here, and change this to a day step. So what this does, if you kind of change these lines, it's going to change our lines from looking at our expiration date versus today to actually looking at what our risk graph would look like if we saw the passage of time really affecting the price of our option and our profitability. So I'm going to go at the 4 at day step here. And all this does is it looks at the step. So a step is just the number of days between each of these lines here. So if you want to change it, and let's just say we want a step of 1. So with each passing day, and this is probably too close here, but let's just go let's do a step of 3. Okay, we'll make this a little bit closer here. Okay, let's widen this out so you guys can see this a little bit better. Okay. Ouch, this is gonna jump around too much here. Let me move it in to where you guys can see. Okay, because you don't want it to jump around too much. It's gonna give me a headache. It's gonna give you a headache. So I just changed that to a step of 3. So it's going to show us today's graph that we kind of just saw there with our price slices at our break-even points to show where we would need the stock to be today to start making any money on this trade, to show us that type of move. So if we look here at the next expiration, or I guess at the next kind of date time frame that we're looking at on the 27th, which is 2 days after earnings, it's going to show us where the stock price is going to have to be 3 days from now for us to make a profit. So if we just kind of take these slices out here and move them to where they're at on the blue line here, I'm just going to carry these out here. Obviously, we're going to need a little bit more of a move here. So we're not just going to need a move above 160 to the upside. We're actually going to have to see a move above 163.55 for us to actually kind of be profitable on this trade to the upside if we are going to hold this trade for 3 days, assuming volatility does nothing, just assuming kind of like that passage of time. That's where we would need the stock price to be to the upside. Now to the downside, you can kind of see our break-even point here. We would need that stock to make a move below 150 to the downside there for us to make any type of profit there. And you can kind of see, even if I just like hover over the price of 148, for example, if we saw a move down to 148 today in BABA, which would be an incredible move in just a day since it's trading at 160, we would obviously be at a $71 profit today. We would be at a $35 profit 3 days from now. And then you'll kind of notice, because of that passage of time, because of that time decay, we're going to need a larger move even for that stock to actually make us, or I guess that price of our option to make us any money if we were to see that move to the downside. So obviously, in this case, we need to expect a large move in one way or another. If the price of the stock really ends up in this area, doesn't make much of a move, really stays in this range of this kind of $10 range or so, we are not going to make any money on this trade. This is kind of where we're going to see our downside here. And it looks like our downside would theoretically, just over this kind of time frame, if we just held it for a few days, our downside wouldn't be breached too badly. Just looking at $30 loss today, $70 loss, or 3 days from now, $28 loss 6 days from now. So just kind of showing you it's not going to impact us too much, just based off of if the stock did nothing, we just saw a little bit of passage of time, we didn't see that move, we could close that option out at a small loss there. So another thing that we're going to look at is just to see what the impact of implied volatility can do to this option as well. So if you kind of want to take a different scenario here and looking at these lines here and go to vol step 4 at vol step, it changes those lines from just kind of dates to levels of implied volatility here. So I'm going to see if we can kind of move this out here. And I made this step of -5. So, and we can do that for a +5 as well, just showing different lines of 5% increments in the change of implied volatility. But I did this by looking at -5 because that would be if our implied volatility were to go down a little bit after earnings, which is something you would typically see in a stock. I know we looked at the example of this stock. We didn't see quite a bit, like a huge plummet in implied volatility or a huge volatility crush here, but I just kind of wanted you guys to get a little bit of an idea what our profit and loss could look like if we did see a decay in implied volatility. So let's just look at maybe just an incremental 3% change in implied volatility. So right now implied volatility is 48.92, so roughly 49%. So our next line would be like roughly 45, 46% there. So we would see a little bit of a loss, especially if the price of the stock stayed within this range still. See, if we didn't have that major move, if the stock stayed in this range, we would see a couple $100 loss here, just kind of looking at those dates with each incremental step down in implied volatility. If we just looked at a 1% change in implied volatility, obviously we're not going to have too much crush to the downside there, so that will kind of give you those steps there and what you may likely see. Now, let's just kind of say, okay, we did have a little bit of crush in implied volatility. Maybe the stock went down, let's say 4%. So it went down, or I guess not the stock, the implied volatility went down 4%. So we'd be looking at that gray line there. Let's just say the implied volatility went down 4%, but the stock made a major move. And usually, honestly, that's something you don't see quite too much because usually with a big breakout, implied volatility kind of follows. But let's just say, use this as our example. So if implied volatility did go down 4%, but our price of the stock made an $8 move to the upside, showing us right around 168, we still would be in a profit-taking zone. It would be a very small profit, but that would still put us in that profit zone. So that kind of shows you what type of expected move you'd kind of have to see at these various levels of implied volatility changes, should that kind of impact the price of our option after earnings with that volatility crush. And same way to the upside. If we were going to look at a 2% move to the upside in implied volatility, which is probably more kind of likely what we would see if we did see kind of a major breakout to the upside or the downside, because typically with major breakouts, volatility obviously kind of follows that, or usually volatility is kind of used in that measure of the breakout there. And this kind of shows us what we would see to the upside. So even if the price of the stock really stayed within the range of, let's zoom this out a little bit. Okay. So even if, and it's not showing our break-even points on the other ones, but those would typically be a little bit further out. But just looking even at today. So if we just looked at today, we can just see where the price of the stock could possibly be if we saw a 1% change in implied volatility. Let's just kind of use this as an example. So if implied volatility went up 1% today, puts us at that blue line, we would still be in a profit even if the price of the stock stayed within this break-even range, right around 151 and 161 there. So that kind of really shows just kind of how you can see that impact of your option or your profitability based off of the movement of implied volatility. And you can obviously, and I know Kelly kind of put this in the chat too, you can use this, if you don't want to use the step amounts to kind of get this visual and you want to put it back at 1 at expiration, you can actually use this volatility adjustment down here by just clicking on the little gear window to the right, and you can make a volatility adjustment that way kind of manually by looking at, let's say, a 2% increase. Oops, it doesn't want to take my cursor there. 2% increase in implied volatility. I don't know why this isn't working. Well, it doesn't want to work right now, but typically you could just type that in and then it would show you your same risk graph here by looking at today versus expiration. It would just show you based off of that volatility adjustment. The only difference there is this is going to show you it at various levels. Where you can kind of choose that step in between. So it really just kind of gives you cut and dry what the price of the stock needs to be with that move, where implied volatility could go. So it gives you a little bit more of a visual there. So hopefully that kind of makes sense on what you could possibly do on the Analyze Risk Profile tool. Obviously with BABA, we are looking at a lower implied volatility percentile, which is kind of why we may expect could be even an increase in implied volatility after earnings. You never know. But a lot of times, like what we kind of mentioned, you will typically see a little bit of decay in implied volatility here, especially kind of looking here. We saw a little bit of a spike there. Here we saw a little bit of a crush. Same with this one as well, a little bit of a crush, but we have implied volatility kind of declining leading into earnings there.